hope that everyone's staying safe. We at GrowFox has been working from home for the past 5 months, and I'm doing this now from my house in Allen, Texas. So I hope that everyone's is staying safe also. Today I will what I will do is I will introduce some features, some old features and some new features and of the website, and discuss what we're doing now in development. Then I will answer the questions from the participants. Again, very happy to see everyone again here. And I will share my screen here. Okay, I will share my screen, and can see that this is the homepage of Guru Focus. One thing I always want to emphasize is that the search function. The search function is very powerful, and I hope that you use a search function. For instance, you can, of course, search by company ticker and also by company name. Of course, you can also search by company name, and you can search by guru's name. For instance, Warren Buffett, or you can just go with Buffett. And if you tap Buffett, you can go to Warren Buffett's stock picks. You can also come to the related page of Warren Buffett. For instance, I entered Buffett. We have a Buffett indicator, and you'll be able to come to Warren Buffett's indicator as well. We talked before. I'll talk about this also again. And you can also search the economic data. For instance, oil price. You can search crude oil price, Brent, for instance. Here you'll be able to get the oil price from here as well. And you can also search actually by articles or by author's name. Graham is one of our editors. If I just use his name here, and you'll be able to find the articles he wrote lately. One of the articles he wrote lately, and he's actually recording this and doing the streaming work to YouTube. So I really encourage everyone to use the search box, and it's very powerful. And it's if you don't use it, it helps you to find much easier to find the features we have. So when you try to find something and use a search box, that's one thing I want to talk again. And then some new feature we introduced, we improved actually. One is the DCF calculator. We made them more easier to use with up and down buttons, this click buttons. For instance, this is the discount rate. I'm here at Walmart discount calculator, discount cash flow calculator, DCF calculator. If I think that the default discount rate is 12% here. And if I want to change it, I just click this so that the discount rate can be lower, and I change it to from 12% to 8%. These days, I think maybe it's better to use a lower discount rate because the interest rate is so low. And you can also change the years of growth stage here, same way as you did with a discount rate, and also the growth rate here. The growth rate, you can change all this, and then the terminal year of growth and the terminal growth rate. You can change just by click the add and plus minus button here. Once you do all of this, you can save it. You can save parameters, and next time you come to this stock, you can load it up. So that's the improvement we we made to DCF calculator, and you can create your own parameters and save it. So it helps you to get a parameter next time. That's the DCF calculator, and after you get the value, you can click on this save button here, and once I click it, and it displays here. So you can see that those are the historical, the value defined by the users, and you can use those as a reference. That's the discount cash flow calculator, the changes we made. And the next thing we made, we add a vote function here. If you notice here, if I come to a stock that I haven't voted before, it will, okay, it doesn't show on 30-year financial page, but it shows on every other page. You can see it has a vote button here. The reason we add a vote button is because Charlie Munger and Warren Buffett actually both once said that we have 3 baskets, and one is buy, one is yes, second is no, the third is too hard. So they have 3 baskets: yes, no, and too hard. And here it will allow you to define your basket. You can see we have 4 baskets here: buying, considering, researching, and not interested. The reason we have a not interested there is because for some users, for some investors, they are just not interested in any, and in some type of companies, no matter what, no matter how the valuation is. So that's why we have a not interested here. And once you vote here, it will become a watch list to you, and it will go to a watch list. If you come to all-in-one screener, you will be able to use it. You can here you can have it will become one of the screeners you have here, and it should be called buy, yes or no, if baskets buying here. If I just come here, it will select the stocks I check before as buying. It will apply here. And sometimes for the stocks you're not interested, okay, for stocks I'm just using some examples here. Some stocks not interested, you can just exclude them, and it will never appear in your screeners again. So because we know that you're not interested in those at all. Okay, I got some questions. I will address those later. That's the function, the vote function we recently added, and you can see that actually the results most voted. We have a basket here. For instance, Facebook, you can see the vote results by our users. This different dates, stock price, different stock prices, and when they voted. For instance, on July 14th, 2 users voted buying. You can see that Intel is now the most voted company actually among our users as buying. And if I come to Intel, especially you can see that when Intel okay, can you see my screen? Just wondering. Yes, okay, great. And you can see when Intel price had a price drop here, lots of users, 7 users voted buying on the day that Intel had a big price drop, and still more people are buying. I'm not sure if they're doing it right or not, but it just shows that our users are more concerned, and when the stock price dropped a lot, they started buying. And you can see that this is considering researching, and okay, not interested. Interestingly, for Tesla, and Tesla is a stock that voted least favorite among our users We know that Tesla stock price has been doing great, has been doing so well here. If you can look at the Tesla stock price, but our users are not very interested in Tesla. Just to let you know. Okay, that's another feature we added lately, and I hope that you like this feature. If you we'll also actually add a place that for user to write notes why they don't like this stock or why they're buying this stock, and so that they can share it too. Okay, I mentioned the Buffett indicator, and let me come to Buffett indicator here. It's under market. Of course, you can search it. If I just search Buffett here, and you can see the Buffett indicator. I come here. Buffett indicator, I'm not sure how familiar our users are with this. And I talked about this many times before. And as said by Warren Buffett, he said that Buffett indicator, the percentage of the total market cap relative to US GNP is probably a single best measure of where the valuation is at any given moment. So if we come here, you can see this blue line here. It's the US total market cap. Excuse me. The green line is the US GDP. US GNP, actually. GNP, GDP is a difference, always quite small. And we're using GDP number here. Of course, we had a drop of GDP lately because of the pandemic. And we can see that the market valuation, this is the indicator, Buffett indicator, which is a total market cap over GDP. And this ratio is now standing at 175%. And it has never been this high before. The previous peak was the dot-com bubble in year 2000 here, and now it's the highest historical highest value. So we always think that the valuation should come to the mean, and from this, we think the market is overvalued. We think the market is very significantly overvalued here, and the future market return will be small, likely to be negative return for the future 8 years on average. That's what Buffett indicator told us, is telling us. Yeah, that's Buffett indicator is saying that the market is very overvalued, and I personally think that GDP will come back to normal after the pandemic. So maybe the market is not as over, because this pandemic actually never, things like this never happened before, and things maybe will come back to normal if the pandemic goes away. The valuation won't be looking as high as it is now, but it is still high. It's still much higher, than the 2000 tech bubble, and but may not be as high as it indicates here. But the future return will still be very small. Here, I want to comment a little bit about this current valuation compared with the year 2000 tech bubble. In the year 2000 tech bubble, we have lots of companies that were very overvalued, but the difference was that in the year 2000 tech bubble, most of the tech companies don't have earnings and don't have profits. Many of them don't even have revenue. But this time, it's really different. This time, the largest tech companies like Amazon, Google, Microsoft, and Netflix, they all have very good earnings and very good growth. So it seems like the valuation is much more justified this time than the previous time. That's my feeling. And someone is asking if we have different country for this. Yes, we have a feature called by country here. If you come to this menu, it's come by country. The second one is actually India. Okay, if we come to India, and so here it lists the countries we did calculation, and yeah, that's for India. The way of calculation is actually the same. This is total market cap for India, and this is this is GDP of India, and this is a ratio, and then from this we can estimate. Okay, this is one chart. This blue line is the actual return for India market. The green line is a projected return. Consider that when the two lines had a similar time, when they are from the year 2006 to 2012, and the lines overlap are quite good. The overlap is pretty good. That means this model, at least historically, quite well predicted the market return for India. So most likely it will do a pretty good job for the future as well. And you can see the different countries. I'm not sure why here Turkey says 100%. When I need to double check the number. Sometimes maybe have a bug something. But now let's come back to the Buffett indicator again. We can see that from this we can project the future returns. And on this line, if I remove some of the lines, just to make it easier to read. Okay. If I remove some of these lines here. Okay, on this line, the green line is if the market come back to the median, historical median number, 20-year median number. And the blue line here is if we are very optimistic and what the future market return is. And now these days, even if we are optimistic, the future market return is quite small. It will be maybe around zero for the next few years. And this yellow line is a actual return, historical actual return. And you can see that it works pretty well. It overlaps pretty well with the blue line. And now in recent years, it's above the blue line. The market is going so well. The trend is actually quite agrees quite well. But overall, I think that in the next 8 years, the market return will be much lower than it has been in the last few years. We have a similar feature called Shiller PE. Robert Shiller is after Professor Robert Shiller of Yale University, and everyone knows about him, I think. This is a historical Shiller PE. Now it's at 32. The Shiller PE is the historical median. The historical median 20-year average was only 25. Now it's 32. So it's about 24% higher. From this, we can also project the future market return. And it's here, the green line here, the projected future market return. And the blue line is here the actual return. You can see that they overlap pretty well too. And with the Shiller PE model, the future market return will again be quite low, will be around 1%, including dividends. So this is the market. Okay, now let's come to the individual stocks. One thing I want to share. Okay, this under this screeners manual, we can see that we added lately how many new stocks within each portfolio. Within each screen, these are the guru focus screens, and this 4 new. This is updated daily. So these numbers are updated daily. And if I come to this high quality stocks that's I created, you can see that we have a new stock within this screener, and you can also make changes based on this screen and save it as your own screen. The way you can save it is there's once you load this, it has here a button here. You can click on that. Click on this, save. You can give it a name and save it. Once you save it, it should appear here, my screeners here. And then next time you can load it up immediately, just by one click, you can load it up. And it works for all markets, for USA, for Asia, for Europe, for Canada, for every region we cover. And also you can set email alerts for that. Here we have a manage screens. You can, for every screen you can set an email alert. Once there are new stocks, you will receive an email from this screen, and it will tell you which ones are new so that you can work on it. That's a screener. We also made a change to the screener. If you can see that for next to every filter now, we have a little eye here. This is added because sometimes we want to see the parameters that's not selected. For instance, if I come to screen here, if I reset the screen, okay, if I start from a fresh screen, okay, this is CoreFox all-in screener. And if I select a parameter, for instance, I want large companies with sales more than 200 billion, and I want also ROE higher than 25%. I select all this. Okay, there are only 2 companies left. If I 22%, there are only 4 companies left. And I want to see more information about these companies, but I don't want to make change to the company. What can I do if I want to see the Pedroski score for these companies? Previously, we cannot do it without setting up a filter. Now you can just click on that, so the Pedroski F score is displayed here. And you can, if I want to add return on tangible equity, I just click on it. Return on tangible equity is added here. So you can easily add any parameter you want. ROE 5-year median, ROE and ROE 5-year median. So you can easily add any parameter you want to see here. That's a feature we added. And sometimes you may wonder that one company you think should be here, but it doesn't show up. For instance, Tesla. Maybe you think it should be here, but it doesn't show up. So you type Tesla here, it appears on the top with a different background. And here's an underlined red color. Red underline. It shows you that what parameter does not satisfy this screen. It shows both ROE and sales does not satisfy for Tesla in this case. And maybe, okay, how about Microsoft? If I Microsoft, why Microsoft doesn't show up? I just appear here. So Microsoft has sales actually is only 143 billion, and here I'm asking 200 billion. That's why Microsoft doesn't show up here. So it can allow you to compare the companies easily, and not sure that if you are aware of this feature. Okay, someone is asking, do we have a API to pull data from the user created screener? No, we don't have this API. Is this set up a way, is set up that some screener cannot be backtested from all-in-one screener? Yeah, the green-black screener probably very hard to backtesting here is because of ranking. Currently we only support ranking by current data, current values, but that's something we're actually working on. We will allow customized ranking, and we will allow customized ranking. So the combination of different parameters rank together. That's actually in the development of the next stage. Okay, because here I'm on the screener, I will talk about something more about the screener. We are adding a feature which allows you to screen the historical data, compare with the current data. For instance, if you want to do the sales grow 10% every year for the last 5 years. So you want to see a company sales that grows every year for the last 10% for the last 5 years. It cannot be done with the current screener, but we're adding a feature that will allow you to do it. So you will be able to compare, you will be able to screen the company sales grow 10% every year for the last 10 years. You can also screen the company sales, profit margin, for instance, operating margin, 10% every year for the last 10 years, something like that. And that's something we are developing, and it will allow you to do it. So at 10 years information for specific measure. Yes. Submit is asking whether we allow 10 years information for specific metric. Yes, that's something we are developing. And if I create screen a new company or match the criteria, the only way to get notified is by email. Currently, yes, email, or you come to the website here, it will show how many new here, and you just pull it up. It will allow you to do it. So the thing we're working on currently is the allow you to do historical data screening. I think it's very important, is especially as I observed, lots of company in the case of Tesla, for instance, all in case Square, which is up more than 10% today. Those kind of companies, they were losing money previously, but now they are making money. They start to make money. Usually the stock will jump a lot in this case, and this screen will allow you to do it. And also, for instance, the company's profit margin, you want profit margins is at least stable or growing, and that can be a very powerful indicator. In this case, the new feature will allow you to do it. And then one thing I want to show, I'm not sure how many people are aware of it, is the interact chart. A feature we have for interact chart, some features. For instance, here I pulled up the Walmart interact chart. And if you want to see the historical PE, you can easily see it. And but you can see the PE was very high in the year 2000 due to the tech bubble period. And also in 2018, it was high, also high. But as we all know, that PE is not a very good indicator sometimes for valuation. It's, for instance, in Walmart, this case, it doesn't really reflect the real value because Walmart was having some lower earnings that time. And the stock price didn't really go up that much. The PE ratio, okay, I show the price, the stock price here. The stock price was up, but not as up as it is now. But the PE ratio was much higher here. Why? Because the earning was low that time. So the PE ratio doesn't always give you a real picture of valuation. And then what's a better way? I personally think that a price to sales ratio some works very well sometimes. For instance, this case, the price to sales ratio for Walmart was high in 2000 during the tech bubble. And here in 2008, 2009, we don't see the peak we saw on the PE ratio. And the feature I want to introduce here is actually the price to sales band. We support this feature. I'm not sure how many people are aware of and how many people knows how to use it. And personally, I like it very much. And you can actually draw a price to sales band around the price. For instance, in the Walmart case, we can see three lines here. This line, the middle line, is a price line, is a stock price for Walmart. And the upper line is actually what? is actually if the price to sales ratio is always 1.44, which is the highest for Walmart in the last 20 years. Assuming the price to sell ratio is 1.44, the price should be here on this line. And assuming the stock price is at the price ratio 0.38, it will be this line. It will be on this line. And I call this price to sales band. And it works really well. It works very well for companies that for cyclical companies, for companies that has very sometimes unstable profit margins. It can tell you very well when is the best time to buy. The best time to buy is when this price line is very close to the lower PI band, lower price to sales band. And if I change here to a company that's cyclical, for instance, Southwest Airlines, we all know that airline is very cyclical. The price is not stable. It's not stable. So what's the best way? And we created some templates. It's called, the one I just showed is called price to sales valuation band. If I bring that up, it will load all the three lines by itself. Okay, if I change to 20 years here, you can see that this is the upper, the maximum price sales line, and this is the lower price to sales line. And the best time to buy is actually here, 2012, and maybe here, as long as you believe in this company, think that it will go through the trouble. And here is actually very close. Yes, the sales band depends on selection of time periods. Yes. And I'm changing 20 year now. If I change to 5 year, the sales band will change. It will recalculate the max and the minimum price ratio or price to sales ratio here, and the line will redraw. And you can see that now it's for the last 5 years, the stock price is at the lower end of as lowest, close to the lowest end for Southwest Airlines. Okay, someone asked me to show Apple. Okay, I'll show Apple here. Okay. Okay. If I show Apple price to, if I bring up this template price to sell valuation bands. Okay, here Apple's growth is just so fast. You don't want to see 20 years. It's just but it was so narrow here because the sales grow so much. And you can see that if you want to see 20 years, it's actually at the top of price to sales line. It's reaching the top. And if I look at 10 years for Apple, of course, it's still at the top. It's still at the very top of the price to sales line. And the best time to buy is here when it's very close to 2016. If you bought 2016, it was around $100 a share, so you basically quadruple your money. Warren Buffett bought about 2017, I remember, or maybe 2016. So his cost is about $145 per share. And of course, another good time to buy is here. And this works well for the companies that does not have very stable profit margins. That's because in that case, the P ratio doesn't work very well, but the PS ratio works really well in this case. How can we scan for the timely? Okay, another question. What's the sudden drop mean in chat? Max should be max. I'm not sure what that means. Max PS recent years. Yeah. Okay. Can we scan find timely bias of this ratio from this band? We have a feature. If I we have a feature in the all-in-one screener. we have a feature in all-in-one screener which is called valuation ratio. Price to not this one. I think it's called valuation rank. Yeah. No. I forgot it's under. Yeah, it's here. Okay. You can set that PS ratio is above historical low. I think this historical low is 10-year low. So how much percent is above or below? For instance, I want only one stock that's traded at price to sales ratio less than 10% above the historical low. You can do that. Some numbers are strange, but you can select if you limit your companies are at maybe larger companies. Yeah, here it says 0% above the if I don't want this OTC stocks, 0% above the historical PS ratio. It means that it is at the historical PS ratio low. It is at the point which the PS ratio is the lowest. That's a screen you can use to screen the how much percent above the historical PS ratio. You can do that. But to me, of course, the company quality is always the most important thing. So I always check the financial strength rank and the profitability rank. Those are the important thing for good companies. Okay. When to consider PE, PS versus PB. Okay, that's actually what I discussed about this before. For PE, when a company has very stable profit margins, PE works very well. And for PS actually works for most companies, except maybe commodity companies like ExxonMobil. PS doesn't work really well. PE does not work well either. For oil companies, none of them work well. PB maybe works well. You need to distinguish companies. You need to distinguish which ratio works well for what type of company. And you cannot just apply P everywhere, PS everywhere. For PB, actually, PB price to book works quite well for banks and insurance companies. And PB also works better for commodity company like oil company, ExxonMobil, for instance. Let me show a chart here. So instead of I'm talking here. For instance, ExxonMobil, if I come to the chart, and if we look at the PE ratio of ExxonMobil, the P ratio actually it doesn't give you a very good picture here. And for instance, here 2015, it tells you P ratio is very low. P ratio is only 12. P ratio is very low. Although the stock price was very high, but P ratio is very low. But is a stock cheap? Actually, no. The stock's actually the most expensive in the last 10 years. And then as oil price went down, the P ratio went up. The reason is because ExxonMobil is earning less now. Oil price went down. So P ratio does not work well for ExxonMobil, company like ExxonMobil. And even PS ratio does not work well. If I show the PS ratio here, so you can see this black line. It's a PS ratio. The PS ratio actually give you a false picture too. For instance, 2015 before 2015, the oil price was high, the PS ratio was low. You saw that stock price is cheap if you just look at the PS ratio. But then because oil price went down so much, the revenue declined and the PS ratio went up so much. So it gives you a false picture again, the PS ratio. Actually, I think for oil companies, PB ratio works better because it measures the value of the assets that the company owns. You can see that the PB ratio has always been declining for ExxonMobil. and it's actually at a lowest point, close to lowest point now. And that's a better ratio for PB ratio for oil companies. What parameter to analyze high growth new entry new entrant company like Chinese tech companies, and PDD, KC? I'm not sure what KC is. Let me take a look. Consoft Cloud. Okay, if you want to analyze companies, always come to Growth summary page. I think that's an excellent page. And look at the financial strengths and the profitability rank. For this company, it's so new that we don't have a profitability rank yet. And I always look at the financials, the revenue and earnings. This company has always been is losing money. And this is a cash and debt. Okay, at least it doesn't have lots of debt. And for this kind of company, it's very hard to evaluate. But what I want to observe in this type of company is that at least the loss is narrowing, and companies start to lose less money and gradually turning a profit. PDD is maybe better in this case. Okay, PDD has more data. At least we have a profitability rank of 1 out of 10, which is very low. It's because the company is losing money, is still losing money. But you can see that the company growth is very, very fast. The revenue growth is very fast. And the good thing also, you can see the earnings. Earnings is the loss is narrowing. So this year losing less money than the last year. And that's a good sign, but it's very hard to evaluate. I don't know how much it's worth. Another company I mentioned, which is Square. Square is an example here. Uh, uh, also, we have pretty poor financial strength and profitability rank rating for both for Square. But for Square, you can see the revenue grows so fast, and it company was losing money. Then it started to lose less and less. Now it's making a profit. So you for this starting up companies, and I think that's a sign you want to look. At least the revenue is growing quickly. The company is not doing a lots of having a lots of debt. In the case of Square, the company cash is more than debt. That's a good thing. And also the loss is narrowing. That's a very important sign, I think. And the screener I mentioned, that can screen from the historical data. Uh, it will screen, for instance, last 5 years, the loss is narrowing. We will allow you to screen that also for the new. Thank you also for the new feature we're adding for the screen. So we'll be able to find companies like Square. The stock is up 8% today, and will allow you to screen companies that has fast revenue growth, but the loss is narrowing. That's tool we are developing, and I hope that it will help you to find better companies. And now that's almost what I want to discuss today. If you have any questions, you can type in the chat window, and I will address those. Someone at the beginning asked, Mike Michel, searching by sector. Searching by sector. And searching by sector, I think the best way to do it is you can do it in the all-in-one screener. And we have an industry tab here. And from here, you can select any industries you want, and you only screen from those industries to get the stock you need. That's a way of doing it. We also have a page called industry overview. From this industry, you can see which sector is the cheapest, is the lowest valuation by P ratio, Shiller PE, and PS ratio, PB ratio, and dividend yield. You can sort by those parameters here, and you will be able to go drill in to see the sector valuations, within the sector, different industries and overall historical valuations, and also historical ratios, and the compare of different companies within this page. And that's okay. Someone asking unemployment. Can we see economic data? I think we can. Yeah, if you search unemployment, unemployment. Yeah, civilian unemployment level. If you search in the box, you will be able to see the unemployment level. See here. Now we have the highest unemployment level. Okay, and okay, unemployment. Okay, civilian unemployment rate. Yeah, we have about 13% unemployment rate here, according to a number. It went down to 11%, went up to 15% at the highest level. Yes. Okay. I have a feature that shows the company is part of SP 500. Yes. Can we show? Okay. Can we show Dow and Nasdaq? Okay. We will. I think we can add it. How updated is our data? Our data, financial data, is updated yearly. For the large companies, it's about 24 hours delay. 24 hours delay after news earnings release, or the 10K, 10Q filings. Is there a search to see all companies falling between PS band, valuation band? Search option to see company all stocks falling between the valuation bands. Yeah, for valuation bands, as I shown here, you can use that valuation price. It's under press button. If you're looking for, actually, you can always. By the way, you can always, if you don't know which screener is under which, you can click on this all. You can search. You can search this. Search this. If I here I search. Yeah, I'm not sure. I think yeah. PS, yeah. You can search it, it will show you all the related PS filters. Okay, what's the difference between PS valuation band and the growth screener? I'm not sure what it means. Is there a way to make current portfolio top holding? You can make current portfolios top holdings easier to read. It's more difficult to look at others like top yield. Okay, is it? I think this is probably mean for the. It's a question by Glenn. I think it means for the growth portfolios. If I come to Warren Buffett's portfolio. Okay, current portfolio. You want to see the top holdings. We have a top holding button here. It shows the historical top holdings, the historical holding, but probably you want to see the current top holding. The top holding, if you come here, you can what you can do, you can click on this weight. It will be sorted by the weights. For instance, Apple is 35% Warren Buffett portfolio as of the last quarter end. Okay, feature of a check IPO date. Yes, we don't have a IPO date data for the future IPOs. We have the past IPO date, but we don't have the future IPOs. Can we see fund top holding? We cover some fund, but not all of them. How to value new companies and growth companies? I think it's I answered it. It's very hard to evaluate. And what I want to observe is to see the trend is getting better. At least the revenue is growing quite good speed, and loss is narrowing. Another feature is important to see the company does not accumulate lots of debt. We don't have data currently for the EPS EPS compare with historical, compare with the analyst expectations. We don't have this data. Okay, I hope that I hope that everyone enjoyed this meeting, and if you I will host another meeting next month on same Wednesday afternoon at same time, and from next week we will be hosting a weekly value investing meeting. And next week will be Bill Smith. He'll be share his investing strategies, his investing idea, and people investor. You can all ask questions to him too. He's a great speaker, definitely, and hope that you will come back next week for Bill Speaks meeting. And after Bill's meet, we'll have David Sather. David Sather is managing $700 million as I know last time. He's a great speaker also, and a very good investor as well. And I hope that you come back to our weekly value investing live meeting also. Uh, yes, for the what we have here, we recorded it. It will be on YouTube as well. Okay, thank you everyone, and I hope to see you next week and next month. Thank you.